S&P 500.
I'm gonna get right to it.
$3 trillion in the hole. Boy, they got caught out there, son. They got caught out there, done. They got caught out there. The S&P 500 dropped, crashed. $3 trillion down. Go check out my video from an hour ago, a couple hours ago. This is today live. That's why you gotta be careful, dun. Don't get caught in the crack house. Don't get caught on Lyons Ave, Brick City, Newark, New Jersey. Don't get caught in the Boogie Down Bronx. Do not get caught in Kensington. No. It started real good. I did my video early in the morning. This is how it ended. It started pretty good. There was I saw maybe one opportunity. Go check out my video. It's from 9 o'clock to 11 o'clock, right? Within 2 hours, I only saw one opportunity. You know what I mean? One contract, two contracts could have made you $2,000, $3,000, $4,000. But go check out my video where I explain and I show you live why I was not, too into the rest of the day. I only saw one opportunity around 9:30, 10 o'clock. The rest were crack houses. Too many crack houses on the chart. Too much basin. This is basin. But by the time they got to the base, they already lost all their money. Why? Well, because this was a base. This was most likely a base. After about 9:30, 10 o'clock, go check out the previous video. It was all basin. It went up a little bit and then it was just basin. Basin is like a wave where there's no big strike up, no big strike down. You know what I mean? You don't want it to be basin. You don't want to end up on Lyons Ave in Newark, New Jersey. No. You do not want to end up in Kensington, Philadelphia with the crackheads. No. That's how you end up losing all your money. And I'm not about to lose my money. No, sorry, Bob. I'll be mad careful, let me tell you. Super duper careful. That's why I show you in that video. See, this is what you want, right? You want the basin. Imagine that this stayed the same going this way, right? You want all this basin over here to end. Then you do want it to drop because that's where you get your shit cheap. You know what I mean? Down here. But then you need a signal. You're not just gonna just randomly let it drop. You know what I mean? And then just buy. No. You see that little tiny green dot right there? That's not a signal. No, you need it to drop down here where there's, you know what I mean, cheap, hoping that it will go back up here so you can make money from here back up here. That's what people were expecting. But if it went down here and you bought here because you saw that tiny little green, I mean, it's tiny. That's not money. That's like little tiny money. You need that green to be back to normal, to over here. And then you buy over here. You buy around here. Don't be buying on some tiny little, broke ass green dot. You know what I mean? And then blah, drop billions of dollars. Now here is where people get caught out there, right? Now, don't expect to be perfect, but you need to put a stop loss. When you see that there's basin over here, it was basin over there. It was basin since 12 o'clock. Since 11 o'clock, it was basin almost the whole day, right? That's why you need to see the patterns the day before and the patterns of the day. If you see that the most of the pattern has been basin, which is most days is basin, too many crack houses. If you see too much basin, right, and you need to step back. You need to lean back, moonwalk your ass off the chart. You know what I mean? Today might not be the day. You see 10% is selling, 10% is buying, and only 80%, mostly 80% is waiting. Waiting means not to go in unless the pattern is right, unless things are looking right. So if I see this go down here, right, and instead of this little green dot, I see a half a dot. It has to go half. I need to see a green. I need to see a green one here. These are minute. Well, you could set them up to 5 minutes to 1 hour, but you know what I mean. If you're live, you want to set it for 1 minute. So let's just assume that these are 1 minute. 1 minute. Each candle is 1 minute, and each candle in red means sales. You know what I mean? People just selling off and leaving. And each candle, these are called candles. And each candle in green means people are buying. You want to buy on the swing, unless you're shorting it. That's a whole other video, right? Unless you're shorting it, you're basically risking or betting that it's going to go down. Now, if you shorted up here and you went all the way down here, you made mad money. You could make a lot of money going down or a lot of money going up, right? In futures. But let's just assume that this is just regular stocks, right? Not futures. Futures are like a whole other deal. Let's just say that these are just regular stocks, right? And for most you know, traders, you need it to go up for it to make you money, right? Back to the music. Now, if you're waiting for it, you are waiting for the setup to go down. You are waiting for it to go down. There's no money up here in the crack house because it's not going to go from here up. You know what I mean? If it's been basing all the way back, if you were able to move this gold that way to the left, if you were able to go left, it was basing almost the entire day. I only saw one opportunity within the first 45 minutes, right? Where it went down and then it went up, showed me a signal. The signal is that you want this green to be halfway up the previous candle. You want this green to be halfway up the previous candle. And then the next minute, this is 1 minute, just all you're waiting is 1 minute. You want the next 1 minute to also be green. Then you get in. That's a signal, right? Then you get in. You see how here it's like one green, one red, one green. This could be a setup right there. That could be a setup. But if you get in 2 greens over here, but it's all the way down here and it's all basing, it's been basing the whole day. This is too unpredictable for me. You know what I mean? Too scary for me. I don't like scary things. I like things that I have like a big percentage of winning. So if you came down here and this green candle went up halfway, now you're gonna wait for the next one because that's just one candle. That's not enough. If the next candle was green and went back over here, then you buy over here because you know it's going up. Okay, because that's 2 solid candles, right? And you watch it and you put a stop loss. A stop loss is meaning that if it drops back, you already have a trigger behind it to stop it. That if you lose something, you're gonna lose a little bit over here, okay? But it throws you out. It's a trigger that just sells your stock and gets you out of play, right? Where you might lose $50, $100, maybe $200, but you're not gonna lose thousands of dollars, okay? But most likely, if this green went halfway to the previous red candle, and then the next one was green and went above the previous green. The previous green went halfway, and the next one you want to go like 3/4, like 75% up, right, in green. Then you could get in around right here, and then most likely you go all the way back up here. And you gotta watch it though. I mean, it's not guaranteed, but very, very likely, right? But that's not what happened here. You got red. You got 5 minutes of straight red. 5 minutes is a long time in the stock market, and especially when these candles are red and long. These are not short ones like this one. You know what I mean? They're not little ones. These are big. It's not like small like that one right over there. These are big sell-offs, right? Sell. Then you get this tiny little one. Immediately I'm turning off the computer. The day's done. You need to know when to moonwalk your ass off the computer before you lose $2,000. Hashtag no lie. That is a super duper skill that, you know what I mean, doesn't sound fancy, doesn't sound cool, but it's a super duper skill when to moonwalk your ass off the computer before you lose $2,000 or $3,000 or $5,000 or $500. You don't want to lose any type of dollars. So if I see this little tiny dot right here, I'm immediately turning this shit off. This is not the day for me. I am not waiting for it to come down here, hoping that it's gonna go back up. Because you see these people right here. You see these people right here that were still waiting, right? And bought here. Green means that they bought. These people lost a shitload of fucking money because look where it ended. You know what I mean? Because they were too greedy. They were too greedy and thought that when it fucked up over here, it fucked up over here, fucked up over here. None of this was good. Not good, not good, not good, not good, not good. A little tiny, you know what I mean, sliver of hope. Not good, not good, not good, not good, not good. Then they sold money over here and they were like, I'm greedy. And they got in. They bought. These people that bought money here lost a bunch of money. A lot of money. Okay? Because then it went up and then it dropped, drop. And dummies still bought it again. Because these people don't know what they're doing. I don't know what I'm doing. But I sure as hell, I know how to notice patterns. You know what I'm saying? I'm not an expert. You know what I'm saying? But I know how to notice patterns. And I know how to protect my Casherini Mularini. And I like shit set up the right way for me. And this is not the setup that I want. Go check out my previous video how I show you how it dipped, went up, I buy here, go back all the way up here, sell off over here because I'm not waiting for it to go back to the moon. You know what I'm saying? Once it goes up like 3/4 up, I'm selling here. I'm not even waiting for it to go back up here. I'm out. I'm out and safe with my profits. You know what I mean? Whatever money you guys make up over there, that's your money. That's fine. I'm trying to get mine. I'm not trying to like, you know what I mean, quadruple, katinko, to 6 times my money. I don't need that. I don't need that type of stress in my life. You know what I'm saying? I would have been out like right over here. As soon as I would have put a line right here. You need these lines. They give you these lines, these drawing tools that help you, right? But people bought here. People bought here. They're still greedy. Even after this long as, you know what I mean, this is basin. These are basin. This is not like going, it's not like going back up here. I can understand if it went back up here, you could buy. Because, you know, you're seeing green and green. And for it to get back up here, it would take like 4 or 5 candles, right? But no. These people are greedy. They're greedy there. Bad, 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 bad. It's bad all around. You're like in the middle of Baltimore, right? You're in the middle of the Bronx thinking that you're going to find a wife. No, sir, Bob. You're going to find a crack whore with no teeth, okay? But people are greedy. So they bought here. And now, blah! Instantly, the next minute, look at this massive, massive red candle of sell-offs, right? Instantly, all the people that put their money in that one green candle all by itself right there, surrounded by red and red, this next candle immediately, instantly took all its money plus more, right? Because the next candle, if the next candle is the same size, it's even. Like, you lost your money. Like, you know what I mean? Like let's just say like, you know, 100% of the people that put in into that green candle lost their money. But when it sells, when it's almost double, the next candle, the next red candle, this one, is almost double. This means it took all their money plus half of these people's money. You know, no, their money is already gone over here, right? This is just the killer candle right there. Blah! Give me all your shit. And then they still bought it. Look, they still buying here. They're still buying in the crack house. I don't know everything, but one thing I do know is to stay out of the crack house. Stay out of Lyons Avenue, Newark, New Jersey. Stay out of Market Street. Stay out of Brick City. Stay out of Queensbridge. Stay out of Kensington, Philadelphia. Stay out of the crack house. This is the crack base. They call it basing. That's why I call it crack base. You know what I'm saying? In a stock market lingo, they call this basin when it's like, you know, like a wave. Like it's not really going up all the way or down all the way. It's just basin. Stay out. This is bad news. There's a massive, massive red flag right here. But you see there's still green candles in there, people buying in the crack house. And guess what? They're still buying over here. Even after they see the little red one there, right? That's over here, I'm already closing the... Over here, these 1, 2, 3, this 1, 2, 3, these 1, 2, 3 basin points, I'm already out. I am shutting off the computer. I am leaving. You know what I'm saying? But people are still buying. Look at that little green one right there. These are greedy, greedy, greedy crackheads. Still buying. thinking that it's going to go back up. It's not going up back up. It's a wrap. Look, they're still buying here. They're still buying here. They're still buying here. But there's not enough of them to bring it back up. Because obviously there's more red. This is all red. There's more red. There's more sellers than buyers, right? And now the sellers came back over here. And blow! And blow! A two-piece them. And took all the money that these guys put in. Disappeared over here. And they still buying. Little tiny green ones. These people, these are, I don't want to call them dumb, because I'm dumb. I don't know too much, you know what I'm saying? But these are just, it's the greed. It's the greed, and maybe they lost their money over here, and they're revenge trading, you know what I mean? Like they're trying to get their money back that they lost up here, like like maybe an hour ago. I don't know what their reasoning is, you know what I mean? But once you take an L, if you took your L over here somewhere, you need to just moonwalk, you know what I mean? You need to moonwalk, go wash your face, you know what I'm saying? And just take that L. You lost $100, $2,000, whatever you lost, you know what I mean? 500, you need to just hold that L. Hopefully, if you had a good stop loss, you only lost like $200, $300, right? Depending on what, you know, what kind of contract. Or maybe you only lost $20, you know what I'm saying? But you need to hold that L and just leave. Don't come back, you know what I mean? Like gamblers. These are gamblers. These are people that use the stock market as gambling. Don't come back after you lost $50, $100 and think that you're going to double up at the blackjack table and going to get your money back. No, you're not. You're about to lose more money. That's a super duper skill you need, you know, if you're considering this or learning this, that you need to really, really understand. And never ever forget that when you take an L, or when the patterns are not there, the situation, the setup is not there for you, you need to just step back. Lean back like Fat Joe and just leave and come back the next day. Hold on to your money. Keep your casherini mularini in your pocket. You know what I mean? But look, it continues. They bought there. Even after all this is not looking good, even after all these red flags, they bought there. They bought there. They bought there. And blah, give me your money. Blah, give me your money. And they're still back. They're still over here. They're still back over here for more pain. Blah, give me your money. Blah, give me your money. Blah, give me your money. That shit dropped $3 trillion. The day started good. Go check out my last video because I show you the beginning of the day at 9:30 live, right? The day started good. I saw one good opportunity, you know what I mean? That would have been a good opportunity to step in, grab me $1,000, $2,000, $3,000 on 3 or 4 contracts. Maybe, you know what I mean? Maybe $500, $700, you know what I mean, on one contract, you know what I'm saying? But even in that video, I show you the basin, and I'm like, I don't like the rest of this. I like how I began the first 45 minutes, you know what I mean? From like 9:30 to like 10:30 was good, but from 10:30 to 11 was just all basin. I was like, I'm out of here. I'm dumping this bitch like a bitch with 14 tattoos and 2 babies that don't look alike. I'm out of here, bitch. I'm out of here with my fucking money. And that's exactly what I plan to do. I'm going to start slow. I'm going to start with the micro. Go read the description in my previous video that explains to you the difference between the mini S&P 500 futures, right? Is $500 to get in, but you need about $3,000 to back you up for your account. That's the mini S&P 500 futures. But they also have a micro S&P 500, which is only $50 to get in instead of $500. They got 2 versions, right? And each point, these are 1-minute candles, but you could put them up to 1-point candles. You could put them up to tick candles. There's 4 ticks in 1 point, but each point is $50 in the mini and $5 in the micro. So I'm gonna begin with the micro. You know what I mean, with the $5 ones. And once I get that shit, once I know how to use, mostly what I've got to learn is not so much the patterns. I got that, you know, within the first couple of weeks. You know, I catch on real quick to things. You know what I'm saying? But what I need to learn really more is the platform, where the buttons are at. You know what I mean? How to reverse it, how to stop it, how to sell it quick, how to get in, get out. You know what I mean? How to Bruce Lee the platform. You know what I mean? I need to learn how to use the platform. But once I get that shit done, Once I get, you know what I mean, maybe in a month, 2 months, at the most 3 months, I'm gonna be getting in here, starting small, $5 points. I'm not jumping from $5 to $50 points until I really get the hang of it. But once I get the hang of it, maybe 3 months, 4 months later, you know what I mean, I'm gonna start with $50 points, 500 in, 3,000 to back me up. You know what I mean? It's $500 in a contract, right? I'm gonna start with one contract. Then, if I see that looking good, I'm gonna start with 2 contracts. If I don't see it looking good, I'm gonna go back from the $500 contract to the $50 contract, and go back to, you know, you need to humble yourself and go back to practice with the $5 points and the $50 contract instead of the $500 contract and the $50 points. That's a big difference right there. But once I get the hang of it and I see that I'm winning 60, 70% of the time, 55, 60, 70%. You only need to win 55, 60% of the time. You know what I mean? But you need to protect what you have. If you see that the shit is just, you know what I mean, skyrocketing down, you need to cut your losses here and take that L for $50, $100. Don't let it become $700, $800 down here. Don't be over here in the crack house, you know what I mean, still trying to get your money back. You need to be able to cut your losses up here. You know what I mean? You already seen red, 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 red. You don't see no type of green. You need to be out. I'm out of here. Let me hold this L. You know what I mean? And you just come back the next day. Right? But once I see things looking good, that I'm winning 60, 70%, 50, between 55 and 75% wins, right? That's enough to cover my losses. 6 months, a year in, I'm gonna start dropping 3,000, 4,000, 5,000, 6,000 on these contracts. Cracking these niggas for like 10 grand, 20 grand, $25,000 a day. That is my goal. And that might sound a little too crazy, but the pattern is the same whether you're risking $5 or you're risking $4,000. You know what I'm saying? The pattern is the same. The chart doesn't change, right? You just need to know to get out. Now, especially if you're risking $4,000 instead of $500, you need to, instead of getting out here, you need to get out over here. You know what I mean? Instead of getting out here, now your risk management has to be better because you need to get out over here. You don't, one candle, two candles, I see 2 red candles and no green after it. Immediately I'm out. You know what I mean? Now, when you're risking $5 or $50, that's different. You can wait up to down here, but you cannot wait further than that. And that's why you need the other line. You need the line. I put lines over here that tell you. You know what I mean? I put a line over here from the previous day or the previous hours. Put a line across here that shows me my pattern levels. You know what I'm saying? And if this shit goes way below my pattern level, immediately I'm out. If it goes below my pattern level and it goes back up, I'm gonna wait for 2 green lines, and I want big lines. I want good lines, not little tiny crack, little minuscule shit that you can't even notice. All these people that bought here should have just left right here and never came back. You know what I'm saying? But you know what I mean? You know the champ's gonna. I'm gonna figure this shit out. I'm gonna practice it really nice and good for like 6 months to a year. But within a year, I plan to start cracking these niggas. I'm gonna start cracking these niggas. I can already tell, cause I look at the patterns are usually the same. Not the same every single day, but very, very, typical. Most of the days. Let's just say like 2 to 3 days out of the week, the patterns are very, very similar. You know what I'm saying? And the other 3 days, the patterns are crazy all over the place. You can't predict it. Those 3 days, you need to be out and not spend your money, not lose your money. But the other 4 days, cracking these niggas. About to crack these niggas. I'm gonna come into this shit like, you gotta come into this shit like a stick-up kid. You know what I mean? Like, you need to come in and rob the crack house, not hang around the crack house. You need to come in with your black hoodie on, your black ski mask on, your fucking 2 handguns and a duffel bag. Come in, blow, rock these niggas for like 20 G's and be out in 2-3 hours. Hashtag no lie. Don't hang out around the crack house. This is the crack house, the basing. Don't hang out around the crack base and lose your fucking money. That's how I understand this. This is how I catch it. That's how I caught on. I studied these things for like the last 2-3 weeks, and I already caught on. This is not DraftKings. This is not FanDuel. This is not a poker game. This is not a game. Because if you look at the pattern from the days before, it lets you set your lines. You know what I mean? You can put lines here. You put lines here. You put a line here before it gets there, letting you know that, yo, that's your exit. A red line is your exit, and you put a green line over here, that's your intro, like where to get in. You know what I'm saying? Once it hits that, and you could preset it, automate it, that it just automatically gets you out. You know what I mean? It saves your money and protects your money. It's called a stop loss. But I'm really figuring this thing out. I'm feeling excited. I'm feeling excited because I know within 6 months to a year, I'm gonna be cracking these niggas. Imagine making 10, 20, 30 grand in a day. People don't even make that in a year sometimes. And they sure as hell don't make that in a month. You know what I'm saying? Yo, I'm feeling excited. I'm about to crack the game. Hashtag no lie.